Okay, everybody. Wow, that's all I have to say. But no, yes, and no, and maybe. But let me start off with this: the date, because people freak out when I don't do that. So we're at Thursday, August 17th, 2023. This is my post market wrap up. But just going back to what I said, I mean, wow. But again, you and I mean, look, let's laugh. You and me, we can actually sit back here and laugh. We witnessed what has happened to this market since MMRI 250. I don't even know where we are right now. Can someone please check the MMRI for me? It's not looking too pretty here. Risk in this market 275. Thank you, Goldstein. Like gargoyle. That's great. Anyway, yeah, it's pretty. It's crazy. I honestly expected. I didn't think this would happen. I thought that the Fed would jump in here, and they still might. Um, but there's a lot going on here. We have nations around the world dumping, dumping U.S. debt big time. Saudi Arabia, since 2020, has dumped their position in U.S. debt by 41%. Brazil, China, other nations around the world, they're dumping the debt. You know, and that's a why are they doing this for a lot of reasons. Again, there I assume, okay, let's talk about why this is happening. I mean, there's a multitude of reasons. US debt is worthless. That's number one. Number two, you got this situation where nations around the world are sick and tired of the US dollar uh creating an unfair trade imbalance lately, especially since the Fed's been raising rates. This has caused obviously the U.S. dollar to gain a lot of strength. Okay, so nations around the world are going to dump treasuries, trying to weaken the dollar. See how that's how it works. So there'll be a more fair trade balance. But look, this everything is just so messed up right now. It's not going to make any difference. We are so far beyond the point of no return. Honestly, so that's there's several reasons, and then you got the other reason why debt is being dumped. Quite obviously, is I would assume, and I think this is more than likely because we just heard from the Ultimate Freak Show just yesterday in the Fed minutes, the Fed is going to raise rates more moving forward. So you want to be out of this stuff, and that's why U.S. debt is getting dumped. Period. Um, and this is honestly creating a pretty precarious situation, or I say a very dire situation in the market with risk where it is. I mean, this is obviously not a place where the market likes exactly SOS, not exactly where the market wants to be. I mean, this is you and I have seen this time and time again. You got when the 10-year yield crosses 4%. We're at 4.3 right now. This market starts to, you get a little upset about it. And generally, we've seen the cavalry kind of come in. All of a sudden, a miracle occurs. Wow. And 10-year yield comes down, but that's not the case. Here's the real situation here. The Federal Reserve may well be trying to buy more debt and push yields down, but perhaps the pace at which nations around the world are dumping the debt is outpacing what the Fed's buying. You understand? There's so many little things that are lurking around that could be occurring here. But the bottom line is, you and I have been prepared for this. You and I know what's going on here. We've seen the writing on the freaking wall. Clearly, so again, speaking about this market, so the Dow Jones Industrial Average earlier today, the market was all giddy. Oh yeah, it was spraying its shorts all over the place. It was orgasmic, triple-digit gain for the Dow. We erased all that. It finished down almost 300. All the major indices took a freaking bath today, free fall. Crude oil caught a bid today. Silver caught a bid today. Gold fell under pressure. Cryptocurrencies pretty much across the board got hit. Someone that writes a lot on my in my free newsletter asked a question. It was a very, very good question. The question was this: in a market meltdown situation. Thank you, Joe. Yeah, gabagool, exactly. Um, what would be the initial reaction, at least in my opinion, for let's say commodities and other assets? I think it all gets sucked down first. Generally, that's what how the market reacts. If you look back at every market, and I'm not talking about what we're seeing now, I'm talking about in a real crash scenario, which we really could be there, but we'll see how this plays out moving forward. But in a full-on crash scenario, everything goes down. Okay. And that there are opportunities there. Again, so the question was, will commodities take a hit at the initial drop of a market crash? And the answer is, in my opinion, absolutely. I think that the market throws the baby out with the bathwater every single time. This happened at the last meltdown, and the big financial crisis. Speaking of the financial crisis, how about this? I'm going to read something lovely to you. If you do subscribe to my free newsletter, guess what? This is there for you. The 10-year bond yield, highest level since 2007. That sound familiar to you? Yes, meltdown, financial crisis. And I wrote this to all of you, and I'm going to read this just real quick. Lions and Friends. A sell-off in government bonds has pushed the 10-year yield note to its highest level in 16 years. Risk in this market is getting very high. Again, no surprise to me, no surprise to you. Every single one of us here is watching the Mannarino market risk indicator. Again, it has been spot on. If you are a long-term investor, it may be wise to sit tight right now. Don't do anything, okay? Think about possibly not adding to long positions, or if you do add to your long positions, be cautious about it. Now, if you are a day trader, an intraday trader, a swing trader, there's some crazy opportunities that are going to come up for you, and they are already. So, again, this market is very unhappy about the current high-risk environment. That's one thing. And then, I want to just run this by you too. And I have a lot more other stuff I want to cover. So can you read that? Or is this backwards too? Because it looks backwards to me. I don't know. The Federal Reserve confirms. Are you ready for this? They have now confirmed that American citizens are wiped out. Let me read this to you. Imagine my shock. Imagine your shock. Lions and Friends. This is also in your inbox if you subscribe to my newsletter. Free. Link in the description of the video. Lions and Friends, and that means all of you. The Federal Reserve confirms that American citizens are wiped out. Breaking news. According to a new Federal Reserve study, American citizens have almost depleted all of their savings. Now, imagine my shock. I actually wrote that. Imagine my shock. Not only has the average American depleted their savings, they are now carrying the heaviest debt loads in history. Listen to this part. This is me, of course. This is exactly what the Fed is doing deliberately. This creates dependency on the system, as you and I have talked about thousands of times. Now, tell me again, where is the uproar? People are leading themselves into slavery and servitude willingly. It's unbelievable. So you do have these in your inbox, people. But imagine my shock. Imagine your shock. Let's talk about a few other things here. On top of that study here, I was just, some things just pop into my head. And this was one of these, the U.S. economy, the world economy. I don't think it could possibly be worse off than it is right now. It is in absolute dire shape. Now, they're trying to play this up as if it's a good thing. Another week has gone by, and first-time unemployment claims came in at 239,000. See, if you hear about that on a weekly basis, doesn't sound so bad. Average this out per month. It's a pretty big number. Anyway, I think that's pretty interesting. Don't you? I would have to say yes. So here's the current situation. You and I, better than anybody else, are keenly aware that risk in this market is getting out of hand. Okay. You and I are keenly aware that an uncontrolled sell-off in this debt market is going to occur. Is it starting to occur now? Honestly, it sure looks like it. It sure looks like it right now. Without direct intervention, you've heard me say this over the past several weeks, without direct intervention here, and maybe the Fed is intervening. Again, you got Saudi Arabia dumping debt, China dumping debt, Brazil dumping, you got countries around the world dumping U.S. debt. Maybe the Fed's actually trying to buy more, but they can't keep up. The Fed needs to buy much more to suppress rates. Thank you, Justin. I appreciate that. We'll see if we continue to. I don't know, tomorrow we continue to see the same kind of a scenario, this could get very ugly very, very fast. I mean, the video I did this morning, the title of it was, the stock market just flashed a sell signal. That actually happened yesterday. I forgot to mention it, but we got deeper into that sell signal mode here. The price action of the S&P 500 has crossed the 50-day moving average, and we're going lower. It looks like we are going lower unless, of course, some intervention is happening. And what can the Fed do? Weaken the dollar, buy more debt, buy large cap stocks. They haven't seemed to do any of these things yet. But what does that do for you and me? Does any of this change what you and I have been doing? No. That's the beauty of this. You and I have been on the right side of this, as far as I'm concerned, for a very, very long time, bidding against the debt, becoming our own central banks, realizing this entire freak show is going to get very real. Are we at that point? I guess we're going to see relatively soon here, people, honestly. If risk keeps rising, I mean, we could hit who knows what number with regard to the MMRI. Now, look, I got a lot of people who are new here don't understand it. And I wrote a piece about the MMRI today. The MMRI does one thing and only one thing. It measures risk in real time. It's not a crash indicator. You can have a market crash at a very low MMRI number. It would seem more likely that you would get a crash when risk is very high. But again, you and I understand that the big crash does not begin and will not begin in the stock market. Look at how this has worked out since we crossed 250. 10-year yield higher, 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 higher. The debt market drives the stock market. You all know that. So while everybody else, you turn on Bloomberg, you turn on Fox Business, CNBC, and every other freak that wants to crawl out of the woodwork, they're focusing on the Dow Jones Industrial Average. You and I are looking at the driver being the debt market. Why do you think? Let's put on our thinking caps for a moment. I got my thinking cap on. I'm going to wind it up. Okay, it's wound up real good. Why do we think, why is it that central banks around the world have chosen to buy all the debt, keep rates suppressed, quantitative easing 1, quantitative easing 2, operation twist, and go on and on and on, keeping rates suppressed? Because what that does is it opens up a doorway for cash to flow into the stock market, to flow into real estate here. And we haven't even seen anything yet with the commercial real estate thing that's going to unfold. But again, this creates distortions in the market. So the opposite effect happens when debt sells off. When you get spikes in the 10-year yield, the bonds start selling off. So that's how this is eventually going to play out. The driver of the market is the debt market. This is why central banks have chosen the debt market to rig. So you see, there's something called a highest order, and I use this all the time. Well, we are so far beyond the highest order right now with regard to the rigging that has gone on in this debt market. Thank you, Indy. Wow, I appreciate that. No, you're all the best. I'm just a guy sitting here telling it. I'd like to think telling it like it is. I think what I try to do here, what I've always tried to do is say, what's the easiest way to break this down that, let's say, someone like maybe a Cocker Spaniel can understand? I think I think I'm pretty good at that, trying to break it down, letting people understand what's going on, because this stuff does seem a little complex. How many people say, watch the debt market, forget the stock market? Not too many people, probably. I mean, there's probably a lot of YouTubers now, who are, because now they understand, because I've been out here a while trying to explain this to people. But you get it. All of you get it here. We're all in the right spots. From every angle you want to look at, mentally, physically, spiritually, we're making friends, we're influencing people, we're loving each other, we're caring about each other, we're being charitable, we got each other's backs. I mean, that's the core of this. All this other stuff is just fluff. It's just lovely fluff. You like fluff? I used to like fluff years ago. I haven't eaten it in thousand years. Yeah, I'm actually that old. Anyway, so that's it, people. Look, we've covered so much here today. I want to hear from you on these things. People getting wiped out. The Federal Reserve is actually studying this. They want to see how they're wiping people out. This is a problem. This bond market, 10-year yield highest since 2007. We haven't seen this in 16 years. Risk is out of control. I want to hear from you on these things. all these things that we just spoke about here, and about taking action about what to do. We're all in on this together, and I think we all have the right perspective as to, and we're ready. Honestly, when this stuff comes at us, we know it already. I mean, how many of you are surprised at a damn thing? One thing, none. No, really? You see, you and I, we cannot possibly be caught by surprise because we know what's going on. We know why they're doing this. We know who the players are. We know what they're trying to achieve. Do yourself a favor. All right. I don't make a dime off of this. Get yourself a copy of The Creature from Jekyll Island. This will outline for you what's actually going on, what central banks are doing, their goals, what they're working towards, this one world system, this new world order to own it all, period. So when you click out of this, just, I don't know, wherever you buy your books from or download them from, The Creature from Jekyll Island. It's a pretty interesting thing. And it will really, yeah, exactly. Edward Griffin. It will really open your eyes. It's definitely worth reading. All right, people, that's it. I'm going to close this here. I am going drag racing right now. I'm got my Camaro loaded up. I'm going over to Bradenton Motorsports Park, and I'm going to be leaving the line with my front wheels about 2 feet off the ground in about an hour from now. Okay, with my engine screaming in front of me. I am looking very forward to that. Yes, my Copo is not the Copo. This is my '69 Camaro. My Copo is coming Monday. I'll get some new pictures for you. And the Copo is going to get raced next Thursday. So we'll talk about that. All right, people. Love you a lot. Thank you. Thank you for being here. Thank you for your support. Thank you for those thumbs up. Please help me out with that. I need those thumbs up. We need those thumbs up. Those thumbs up get this stuff out there. It's just so important. All right. I'll see you all in the morning. And I'll give you a rundown as to what happened. I hope it doesn't rain because it rained a lot here earlier today. But right now it's bright sun. All right. I'll see you in the morning. Take it easy.